when we talk about Hong Kong listing, we're obviously not talking about the Hong Kong economy, which is really suffering. Hong Kong, of course, is now effectively just China's third exchange, or China's offshore exchange, ever more so with all the companies coming from the States to a secondary listing in Hong Kong. And I think that can continue for certainly a period of time. The noise and the pressure out of the States is going to drive listings there. As southbound opens to more of those companies, you're going to get inflows. I think it's not unreasonable to think there is some degree of mainland-driven support to the Hong Kong marketplace. How significant that is, I just don't have a good feeling at all. And ultimately, that many of these tech companies will continue to outperform relative to anybody else. So if you're going to be buying anything, it's those sorts of things you're probably buying.
Yeah, that is the case. But even for the index per se, you haven't seen the kind of dent that a risk like this would bring. So there is a lot of underlying support, wouldn't you say, in investor activity in the region? Maybe you can't compare it to pre-crisis levels, but there is still a fair amount of buoyancy. If you just look at how the Hang Seng Index has performed over the course of the last few months, in tandem with the rest of the region, has seen a rebound.
That's true, but the Hang Seng Index is primarily a Chinese index, and if you look at the Chinese indices, they're actually doing pretty well. You know, you've got Shanghai Comp, which is about the world's oldest fashioned index. You can imagine it's down 4+%, but the big caps are down 2%. But all those small names, Shenzhen is up across the board. The Chinex is up 23% so far this year. So again, when you're looking at tech, private companies, that's a lot of the driver in Hong Kong as well. And so that remains buoyant. There's certainly, that doesn't mean the bigger economies suffering, but we've talked many times on the program about the disconnect between what the Chinese economy is and what Chinese companies are listed. And this is where you have the disconnect between the shares and the economy.
Sure. No, that's an important point to highlight, that a lot of the Hang Seng is of course, exposure to China-domiciled companies and China-controlled companies. So that angle is there to the story. To the Hong Kong dollar peg, do you believe the peg would hold or the range would be revisited? Because we haven't quite done that since 2005.
Yeah, no, I have to say, I sort of close my eyes or just put my head in a bucket of sand on this one and say, look, it's going to hold. I think it is such an important financial link and support in the entire Hong Kong system that I really struggle to see that it's going to be broken. I think that both the HKMA and, of course, back then by Beijing will do everything they can to support it. And I really struggle to see that they're going to let it break in times of stress, as it were. If you're going to readjust something that important, you do it very much on your timetable rather than, as it were, on the speculator's timetable. So I'd love to give, in that sense, I don't really do much analysis. I just think it's so crucial to Hong Kong, they just cannot move away from it and break it, especially not at a time of a crisis.